So hello everyone and welcome to today's 30-minute mortgage webinar. So as said, my name is Louisa Lawrence. I am the Marketing and Commercial Manager for Integro Accounting. So Integro Accounting, we specialise in providing accountancy services to contractors, freelancers and small businesses. So if you are in need of help with your tax and financial planning, we can support you. Now, we partner with some of the best in the business, which is why today I am delighted to introduce Andy from Professional Contractor Mortgages, who will lead today's session. So why do we partner with Professional Contractor Mortgages? So Integro Accounting was founded on integrity, which is why we've partnered with them. They likewise hold the same values as us in providing good and honest advice, regardless of whether the outcome benefits us, and it's ultimately what is best for the client. So now, before we start, this is just a friendly reminder that this webinar is being recorded to benefit those that were unable to attend today. Likewise, if you need to leave early or we run slightly over, which we did last time, we will be emailing you a copy of this video. However, no personal photos or names will be shared. Please feel free to use the chat feature throughout to ask questions. So please ask as many questions as you like. We've already had some sent in advance, which we'll answer at the end. But let's not waste any more time and get going. So I'm going to hand you over to Andy, our mortgage expert.
Good afternoon.
We can see you. Fantastic.
Wonderful. Okay. So I thought I'll give you a rundown of me in a moment and what we do. But I thought for today's presentation or webinar, I'll just give you a bit of an overview of where we think the market is at the moment, some of the statistics coming out on the market, and then probably more interestingly for you guys as you've come into it is, what is a contractor mortgage? What are the difficulties out there in the marketplace, and what solutions exist to help you navigate those? So if we look at the market, obviously back in May 2020, there was lots of scaremongering going on around the coronavirus pandemic, and there were statistics out there saying they saw the market dropping by as much as 16%. What we are slowly starting to see is Halifax, who run a price index, it's basically coming out saying that it's defying all expectations. So if we look at last year, average property prices were up 9.8%. So it's the largest increase since March 2003, which I think poses the question, what's driving it? What's fueling this? Now, what we do have is a lot of government initiatives in the market at the moment, so like the Help to Buy scheme and the Help to Rent scheme and so on and so forth. And I think obviously as people got locked down in their properties, people started reevaluating their life choices, especially with kids running around the house and space outdoors and extra bedrooms and working from home. And add into that, we've got generations and generations of people who haven't been able to get onto the property market. And so there's this pent up demand in the market. In terms of interest rates and what's happening, I think well publicised, Bank of England increased again last week by 0.25%. We've got inflationary pressure up at 9%. And the government exercising, or the Bank of England exercising rate increases just to try and curb that and slow things down. What we're then seeing is that's dripping through into the fixed rate market. So if we look back to last week, a 2-year fixed rate up to on an average of 3.3%. And if you look at 3-year fixed rates, up by 0.6 basis points to 3.39. And then if we look over the longer term fixed rates, 5 years up by 4 basis points to 3.41, and the 10 years up even more to 3.51. So, without getting too technical, what we're just seeing is lenders are now raising those interest rates on a really regular basis. And that's posing quite a lot of problems for us as a business operationally, because what used to happen, or what we've got accustomed to over the last couple of years, is a lender maybe deciding to raise interest rates, but maybe giving us a week's notice, which allowed us to prep clients, get applications submitted, secure those interest rates. But at the moment, it's not uncommon to get some kind of email communication at 4 o'clock in the afternoon advising us that rates will be pulled and increased from, say, 5:30 that same day. So it's an interesting market to work in at the moment. In terms of who we are, Professional Contractor Mortgages. So I formed the business back in 2019. So prior to that, I was the sales director at what was then the largest specialist mortgage broker in the market. They went through some private equity funding in order to go and buy their biggest competitor at the time. And for me, the whole ethos of the company changed. So, my outlook is that, you need to be very client centric. If you look after your clients and you do the right things, everything else kind of takes care of itself. And I felt at that time we were moving away to view working things more off a balance sheet and the value of a client as opposed to, how the business had originally been set up. So made the move, stepped out and set up Professional Contractor Mortgages. As the name suggests, we are dedicated to the contractor space. I've been a mortgage broker for 20 odd years. For 14 of those, I've worked pretty much exclusively in the contractor market. Now, because of the history of who I've worked with, we've managed to grow pretty quickly. We've now got 6 mortgage consultants in the business. They are all contractor specialists. So I think we worked it out the other day that's over 120 years worth of experience within the contractor market, which is quite scary when you think about it. But basically what we do, and I do believe we work differently, and I'll walk you through the process in a moment, but probably the key point is, number one, we understand you as a contractor. We understand the various payment routes that are available, but more importantly, we understand how lenders will assess and what kind of information that lender will require to help us navigate the usual issues that you would encounter if you went and spoke to a non-specialist broker or a bank directly. So in terms of the issues, broad brush approach, there's typically 2 key issues. The first one when you're contracting is around your income. So lenders like black and white. And as a contractor, you don't really fit into one or the other. So if you trade through a limited company, a standard mortgage broker or a lender directly is going to assess you as being self-employed. The moment that they hear limited company, you'll be self-employed. And the issues then arise from the way in which they assess income. So for self-employed, and it will vary slightly from lender to lender, but typically the focus becomes on the company accounts and the taxable income. So 95% of lenders will look at salary and dividends. And most lenders will look for a 2 to 3 year track record. So let's, for instance, say you're contractor out there earning £500 a day, but you're running your accounts tax efficiently. You're only taking out what you need. You may be capping your salary to 8,000. You may be capping dividends to 30,000. Well, regardless of what you're actually earning on the contract, from a lender's point of view, they're only going to assess you as earning £38,000. And the impact from that is, and there's lots of news out there at the moment around affordability, it really starts to heavily restrict the amount of borrowing that's available to you. So let's say if we round it up to £40,000, you're probably looking at a maximum loan of about 160,000. And in this market, unless you've got a huge deposit, that's not going to buy you an awful lot. If you're working down the route of an umbrella company, lenders don't really understand their role in the market. Quite often you get lumped into the same category as agency workers. So, let's say term teachers, agency staff nurses. You start getting these ridiculous requests for, have to be with the umbrella company for 24 months, have to be with the same client for that period, have to have 6 or 12 months remaining on the contract. And if you start to get feedback like that, what it's telling you is they really don't understand you or the way that you work. Some standard brokers have been told will look to place you as a permanent member of staff and try and use the pay slips to evidence your income. Difficulty there is that you can spot an umbrella pay slip a mile off just by the way that the income's broken down. So you'll have a very small element coming through as a basic salary and the rest being returned as a bonus or commission or holiday or reimbursement of expenses. And from a lending perspective, that income will almost certainly be ignored. And again, the net result is we're looking at a fraction of your actual earned income for the mortgage application. So they're the 2 issues around income. And then when you're contracting, nature of the beast, we may be applying for a 25-year mortgage, but even if you've got a really healthy contract with 6 or 12 months left to run, there will always be that question from the underwriter of what happens if. So if this contract isn't to be renewed, how are you going to continue to service this mortgage debt on an ongoing basis? So in terms of the solution, so around the income, it is quite a simple one. So we work with lenders to get them to understand that regardless of whether it's limited company or umbrella, all that is in effect is just an invoicing mechanism that you're using to collect your income. So the actual value of you as an individual is held within that contract. So what we would ask them to do is take your day rate over a 5-day week and then over a 46 or a 48-week year, and that will change from lender to lender. And we'll use that annualized contract value as your income on the application. So if I take you back to the limited company, you may be drawing 38,000 and your income would be 38,000 down the conventional route, but at £500 a day over a 5-day week, over a 48-week year, we can declare you at £120,000. So 3 times as much income should broadly translate into 3 times as much borrowing potential. And even if you don't need to use that full amount, what it does start to do is it reduces your risk profile as far as the lender's concerned. So it increases the chances of us getting a successful solution for you. In terms of the various underwriting that exists, what we need to do is we need to understand your situation, and we'll ask you a series of questions to understand how you've been working, what the contract's like looking forward, what you're actually looking to achieve. But we do have solutions where you've only got a month left on your current contract. We can effectively help people from day one of moving into contracting. So if we've got industry experience and we can demonstrate that, it is just a continuation as far as we're concerned. And it's really broadened out in terms of the art of the possible from where we were, say, 12 years ago. In terms of longevity, it's a bit of a strange one, and we still get raised eyebrows when we ask for this now. But one of the key documents we ask you to provide us is a copy of your CV. And that really helps us tackle that issue around the end date on the contract. So if we can demonstrate that the work that you do, the skills and qualifications that make you niche to the market that you work in, and the type of clients that you've worked with in the past, what that will actually enable us to do is get the underwriter comfortable with the fact that even if the current contract wasn't to renew, based on your skills, your experience, and your risk profile, you're going to be able to go and find alternative work relatively quickly, and therefore they would have no impact on your ability to service this mortgage debt on an ongoing basis. So that in its most simplistic form is the solution and how it works. Now, look, 10 years ago, I take it even further back, probably 12 or 13 years ago, I was involved in the initial conversations with lenders around lending to contractors. And it was a long and arduous task, and there's lots of back and forth, but we eventually managed to make a couple of breakthroughs. But the reality was we had 2 lenders at the time. We had Halifax and Woolwich. They were very clear in terms of what they were looking for. So at the time it was, you had to be contracting for 2 years. You had to have 3 months remaining on the contract. You could have no gaps in the last 2 years. They were very, very strict. But they took the risk. And what it's actually done over the last 10 years is we've now been able to build up data with these lenders in terms of the performance of a back book of contractors. And now what is universally accepted amongst the lenders is that in terms of arrear rates and default rates, contractors perform actually better than a permanent member of staff, which for me isn't a great surprise. Part of our argument 12 years ago was if I put a contractor and a permanent member of staff in a room and we take away their work, make one redundant and cancel the contract of the contractor, I know where my money would be in terms of who's going to be back in work sooner. Because as a contractor, you network, you're always looking at the next role whilst you're currently in your current position. Fast forward to today, what we've seen is a real development in the market in terms of the lenders now willing to look at contractors. And they all have their own quirks and their own niches. But now what it enables us to do is we have lenders who will work with lower day rate contractors where there used to be a minimum income. We've got lenders who will work from day one of you going contract. We've got lenders who will consider when there isn't another contract in place and your new contract and your current contract expires in less than a month. We've got lenders who will consider quirky properties. We've got lenders who will consider adverse credit. So there isn't too many areas now where we are unable to find at least one lending option. Not always. There's always going to be certain situations, and it's normally where there's a combination of issues. But the scope for options for lenders now is greater than it's ever been, and I think it will only improve over the next couple of years. In terms of what you're going to be asked to provide at point of a mortgage application, it's pretty standard stuff, but we always advise up front because some of this does take a bit of time to get together. The lender will often want you to provide proof of your identity and proof of your address, so passports and utility bills. They'll want a copy of the contract. And the important point here, because sometimes it can be quite difficult when an umbrella company is involved, the contract that they're looking for is the one that stipulates your day rate in its entirety. So not the contract between you and the umbrella, the contract between you and the end client, which the umbrella may hold, but it needs to show your day rate, the duration of that contract, and you down as the preferred supplier. With some lenders, they may insist upon seeing previous 12 months worth of contracts. So it's always worthwhile getting a file if you're considering at some point taking a mortgage, is just making sure that you have those contracts available, because they're not the easiest things in the world to lay your hands on. 3 months bank statements. If you're working through a limited company, they'll want business bank statements. What they're predominantly looking for there is, can we see a regular trail of the contract income being credited into the business account? If you're working through umbrella, it will be personal. They'll request personal regardless of the mechanism. And what they're looking for there is more, how do you conduct your finances? Are there misdirect debits? Are there, are you bouncing certain payments? Have you got large payments going out to gambling sites? Is there credits on there going out that haven't been declared in the mortgage application? Your solicitor, and there's one that's missed quite a bit. So any solicitor that you use, you need to check that it's going to be acceptable to the lender that we ultimately go ahead with. Not every solicitor is acceptable, but your broker can work through that with you. If you have an existing property in the background, you need to be able to provide proof that that lender has given you consent to let that property. And a big one at the moment, and your mortgage broker and your solicitor will ask for it, is proof of deposit funds. And quite often they want build up. So it won't just be one statement. They may want statements going back 3 or 6 months to show that those funds have been available for quite some time. Or if they haven't, where have they come from? And what they're really doing there is just checking that it's not borrowed funds, it's not coming from family members, which if it is, it's fine, but you just need to make the broker aware so we can make the lender aware, and we can get whatever requirement they have ready for them. In terms of the types of clients that we help, look, we've got the standards, so we can help you with a house purchase, we can help you remortgage your existing property. We can do further advances, which is approaching your existing lender to maybe borrow some more money. Become really, really popular over the last couple of years, as people have said, I'm being priced out of the market to go up to the next tier of property. So I'm just going to look to improve my own house. You've got product transfers. So that is effectively, instead of remortgaging to another lender, it's just negotiating a new rate with your existing lender at the end of your product term. We can help with buy to let for investment purchases. We can help you buy investment properties through limited companies. And we also have relationships in place with brokers who can help on commercial lending, secured loans and bridging finance. So secured loan is effectively borrowing some more money, but from a different lender to who you're currently with. They will sit as a second charge on your mortgage deed. That's coming a fair bit, and I think will become even more popular given what's happened with rates. Is, let's say, for instance, your main mortgage account is with Barclays and you've got 1.5% for the next 5 years, and if you approach Barclays and they won't let you borrow any more, well, your options at that point is to either remortgage away from your current lender and potentially pay your redemption charges and potentially end up on a much higher rate, or you can keep your main mortgage with Barclays and simply look to find a new lender just to lend you the additional borrowing. So that, I think that's becoming, we're getting more and more inquiries around that as interest rates start to increase and existing mortgages look more and more attractive. Always get asked for top 5 tips. So I've kind of tried to make it specific to a contractor. Now, the obvious one is everything in the mortgage market at this moment is based on risk. Obviously, lenders make a habit from they need to make decisions based on good risk. So your credit profile is one of the absolute priorities. So making sure your direct debits are paid on time. making sure that you're not having too many credit searches, making sure that you're on the electoral register, because that can have a huge impact on your score, making sure that when you do obtain your credit report, you make sure that all your previous addresses are up to date, so any historic data gets pulled through. Another one that lenders are looking at quite a bit at the moment is indebtedness. So you might only have a £6,000 credit card, which in the grand scheme of things isn't a huge amount. But if you only have access to that one credit card and the limit is £7,000, you're right up to the limit in terms of your percentage borrowing, and that can start to have an impact in terms of how lenders view you. Again, sticking with the risk theme, lengthy breaks in between contracts. So one of their major concerns I mentioned earlier is longevity and the what happens if. And our way around that is to provide your CV and show them that you've been able to bounce from client to client and never really had any breaks. Obviously, if there is a break in the last 2 years, that becomes slightly more difficult and it elevates your risk profile. Now, that doesn't mean that there won't be any options available, but it will really start to narrow down those options. And we need to be able to give a really good reason as to why that gap took place. And we need to be able to show that from a financial perspective, you managed to manage that yourself without having to borrow or go in debt to get you through that period. Contracts, as I say, going back 12 months and being able to show a good length of contract going forward will always help. Keeping your CV up to date. The amount of huffs I get when I ask clients to do it, because it's no one's favorite job. But we place a lot of emphasis on that, the type of companies that you worked with, the type of roles that you've had, the period that you're working with them. So making sure that CV is up to date and accurate is really, really important. And then the final point, and I'll caveat this, and this isn't a sales point for me, just speak with a specialist, whether that's PCM or another specialist in the market. It's absolutely imperative when you work in the way that you do that you go and get advice from the right place. The number of clients that we speak to on a weekly basis who are coming to us off the back of declined applications with their banks directly or non-specialist brokers. And what we're in is we're in a market now where lenders share more and more and more information between them. So let's say you go and see a non-specialist broker, they put your income down based on your limited company account. So let's even say it was £50,000. You get declined, and then a week later we go to a new lender and declare your income at almost 3 times that. It can flag markers in the background, and it can make our job really, really, really difficult. So avoid the failed applications. Just get some specialist advice and make sure you're dealing with someone who understands contractors, but more importantly has connections in the banks who understand contractors. And then just, we're a relatively new company, but I just thought it was important to give you a bit of a feel for what our clients say. So we built the company on the basis that we wanted to go back to, we've got a catchphrase that we use, that we think you deserve better. We put the client at the center of everything we do. And I think it's really nice to get the feedback to say that's working. So that's enough of me talking at you. I guess it's over to you guys to see if there's any questions.
That was brilliant. Thank you so much, Andy. And this presentation, apologies, it will be emailed to everybody at the end of this session. So if there's any parts of that you feel you missed or you weren't too sure about, we will follow up with that. So not to worry. So some of the questions we had in advance of this session was from a few contractors of ours. So if you want to unshare Andy, we can see your lovely face. So the first question, now I know you guys and you offer a free initial consultation to anyone that needs your services. However, is there an additional cost when reaching the lender stage? What is the overall process and cost involved? Everything's going up. So how does it work? You don't want people jumping in the deep end and feeling that they get burnt. I know they won't, but over to you.
Okay, so in terms of the sales process, it's quite simple. So regardless of what stage in the process that you're in, we always advise to make contact and start that initial conversation. As you mentioned, it's completely free. There's no charge. There's no obligation to proceed. But what you may get out of that initial conversation is maybe some actions that you need to go away and do that are going to improve your chances. The broker may say it's not quite possible right now, but if you do this, it could be. But ultimately, what we're trying to do in that first call is understand you, understand your situation, and understand what you're looking to achieve. We will then request some documents from you, go out and conduct some research with some lenders. And we're coming back to you with three objectives, really. Number one is to tell you whether we think there are lending options. Number two is, if there is, how much we think you can lend or borrow. And then point three is, if you were to proceed, we want to give you a good indication of the kind of documents that you're going to be asked to provide. Okay, so for that service, there is no charge. If you then wanted us to go out and get illustrations together for you, even get you agreed in principle with the lender, again, absolutely no cost whatsoever and no obligation. If at the end of that you're sufficiently impressed and you want us to act as your mortgage broker, a point of application, we charge £695. It reflects the level of work that we put into presenting a contractor in the way that they need to be. But it's completely refundable if your application ends up in anything other than a full mortgage application. And the reason that we go through so much detail up front is we don't want to submit an application unless we're as confident as we possibly can be it's going to end in a successful conclusion. And look, I would say probably about 93, 94% of our submissions end up in a mortgage offer. The ones that don't, could be that the property's fallen through before concluding. It could be that there was some information that we weren't made aware of, maybe on the credit profile, that has just prevented us being able to get it to mortgage offer stage.
And I think from our clients, that is what is so apparent about your relationship with them. It's that confidence, it's showing them every option and not feeling like you're giving them false hope, which is fantastic. So, one of the questions we had come through on the chat. What are your thoughts on switching mortgage deal, even with the early repayment charge, now to fixed long term, given the rising interest rates?
I think it's worthy of a conversation. There's so many variables to that question in terms of the rate that you're on, the lender that you're with, the duration of that product, the early redemption charges that are associated with it. But what I would say is I think we're in a market now where I don't foresee rates coming down anytime soon. And I think universally across the tabloids, they're talking about consistent rate increases over the next 18 months. So I think it's a balancing act. But I think it's really important you engage as early as possible with a consultant and they can start putting that together for you, because you may well find that the rate available to you just doesn't make it worthwhile doing right now. Or there's 101 different outcomes, but I would say we're not going to know what they are until we've really understood your situation and what you're looking to do.
Brilliant stuff. Hopefully that's answers your question. I suppose another question that we have had come through is ultimately, if lenders are more aware of the independent professional, they understand the benefit of having them, why shouldn't people just go to a high street bank, have a chat with the person they're with currently for their debit card or whatever? Why should they come to yourselves, a broker? What makes that more of an appeal, and why should it be more appealing to them?
Yeah, it's a really, really good question. The reality is, and not a lot of specialist brokers will tell you this, but a lot of these contractor criterias, they're available through the branch, they're available through the standard broker network, they're available to specialists. The key is understanding. And a lot of the mortgage brokers in branch simply don't understand the policy. A lot of non-specialist brokers will look at an umbrella and look like, you've got 5 heads. So it's one, that understanding and being able to apply it to the right lender. But I think more importantly, it's having the relationship that when things do go wrong or questions do get asked, that you can point that in the right direction of someone who does understand. And it's likely to be the biggest financial transaction you'll ever make. And I would say, speak with a specialist to give yourselves the best possible chance. As I say, the last thing we want you to do is go out and get declined and be prevented from being able to move forward.
Brilliant stuff. And just one last question that we had submitted, why have lenders grown? We talk about that entire relationships, but have they become savvier? Are they just filling a void? Is there more choice? I appreciate it kind of ties into the previous question, but that's the last one from me. And again, if anybody's got any others, please submit them for the chat comment. But yeah, it'd be interesting to understand.
Yeah, herd mentality, I'd probably suggest. I think, as I said, 13, 14 years ago, it was a really, really tough job to get these initial lenders to take the risk, because there was no data, there was no back book analysis. We didn't know how it was going to perform. It could have fallen flat on its face. We could have arranged 200 mortgages and 150 of them went into default within 12 months, and then that could have been the end of it.
Mm.
But I think what we've seen is it's been successful. The performance of the back book across the market is widely known that it performs very favorably. Deposits tend to be a bit bigger, incomes are most certainly higher, and so the risk profile now is becoming far better known. And then I think what you see is lenders are, speaking with the specialist brokers and going, look, we can see the volume of business that you're doing, but nothing's coming to us. Why is that? And the conversations are then starting from there.
Yeah.
So I only see it improving. There's still a few lenders out there that I would really like to adopt some contractor policy who won't or haven't. But it's just keep on knocking on that door, and eventually they will change their minds.
Brilliant stuff. That is all our questions, and that is the end of the webinar. So thank you guys so much for all attending. Again, any other questions, please sneak in now before we sign off. Any questions, if you guys would like to have a free initial consultation, you have my details on the invitation, which is louisa@integroaccounting.com. I will then send the lead over to your details over to the lovely Andy and the team at PCM for a follow-up at a time more convenient to you. So thank you all so much.
Thank you.
Hopefully you enjoyed the webinar, and all the details will be with you in the next couple of days. So thank you all so much. Thank you so much, Andy. It's been a pleasure.
Thank you. Cheers.
Thank you
Bye-bye.
all. Bye-bye.